All right, good morning, trade pros. Welcome to our morning market update for Wednesday, June the 20th. It's June 20th already. Never ceases to amaze me how quickly time flies. Today on our morning market update, we're going to talk about oil. We have oil inventory numbers coming up. We're going to talk about the further escalation of this China and U.S. trade war. And I'm going to give you guys the three real options that China has in order of severity and magnitude and how they could impact the market. So China's got to respond to this trade war, and they have a few different ways they could do it. One of the ways they've already implemented overnight. We're going to talk about that in a little bit. And we're also going to talk about General Electric and Canada's parliament decision to fast forward or pass a revised bill for the Canadian marijuana industry. All right, so let's get started for today's morning market update. Let's do this by pulling out our passport and getting a few more stamps on the back pages. I'm running out of room on mine. Let's visit Japan first. It's up 1.2% overnight. Hong Kong's up 0.8%. China's up 0.3%, and India's up 0.7%. Green across the board in Asian markets. But just to remind you guys, that green was not enough to recuperate the losses from yesterday quite yet. The U.S. markets rallied quite a bit overnight. Last night's close was pretty bullish, and we've offset the losses that we've sort of had on this Donald Trump trade war announcement. So we're going to talk about where we go from here. In Europe at midday, London's up 1.33%. Paris is up 0.4 of a percentage point, and Frankfurt's up 0.5. So we're getting a little bit of green across Europe as well. And in the United States, the figures look pretty similar. Dow is up 0.5%. S&P's up 0.3. NASDAQ's up 0.3 as well. NASDAQ tends to be lagging today. It looks like it's lagging a little bit behind the S&P. S&P's got a little bit more of a rally into it. However, remember this, NASDAQ has been the stronger market over the last few weeks. So it's allowed to be a little bit weaker on one of the days to start the session. In other markets, crude oil is down 0.1% to 64.86, now trading 65.63 on the pit open. And today is oil inventory day, so we're going to have volatility in the oil markets. I would strongly encourage you guys to check out our trading room today. We provide a 14-day money-back guarantee if you're not 100% satisfied. But today's trading session is going to be very important because we trade oil. Every Wednesday, we trade the oil inventory news, and you can have single-handedly the ability to make your entire weekly income in 1 hour on one day every single week, and that's exciting. All right, so crude is down slightly, but has recovered some of its losses and now bidding and looks slightly bullish. Gold prices are down 0.3%. Bitcoin's down 1.7%, trading around the 6,600 range. We are seeing Bitcoin have some buy-side volume, so there is some money coming in to prop this support level in. We could rally out of here. Initially, we're looking at next support level down around 4,500. There was another South Korean exchange hack last night, and that put some downside onto the cryptocurrency market, but it seems to be holding these levels pretty good for now. I would say if you're long, look for that 6,200 as support, and 6,000 ultimately should hold. If we break that, we're going down to 4,500 and mid 4,000s. All right, in today's market, we have the current account coming out, minus 124 billion versus 129 billion negative expected. Slightly more positive picture for United States current account. At 9:30, we're going to have Jerome Powell and a whole bunch of central bankers speaking. And the presentation title will be Monetary Policy at a Time of Uncertainty and Tight Labor Markets. They're all at a conference, so you're going to hear a lot of central banks speak right at the market open. So expect to see a little bit of volatility around that. I don't think these central bankers are going to release any kind of new information from their central bank meetings. However, markets are definitely going to be reading in between what they say, and there will be some sentiment that builds around that potentially. So that's a volatility event. Sorry, I got kind of tied up with this headset cord. I got to get a wireless one. All right, General Electric says they have a new plan that they're working on. They're executing their plan, but General Electric has been kicked off of the Dow Jones. This is very interesting. It's one of the original companies of the founding Dow Jones Index. This is by Charles H. Dow's index that he created. It's the first stock index in the world. And General Electric's been kicked off of it. It's been there since inception, since 1896. All right. It's dropped 55% over the last 12 months and more than 25% year to date. And it's down 3.1% pre-market right now. When a stock gets booted from an exchange or gets dropped, there's going to be a lot of selling from index funds that need to match the index. Think about the Dow. It's got 30 stocks, and all this institutional money now has to sell General Electric and buy Walgreens, which is the new stock that's been introduced into the Dow. Therefore, that creates a lot of sell pressure for General Electric as institutional funds pile on to get rid of General Electric and rebalance to create the Dow index once again passively by adding Walgreens. So if you're looking for some momentum, you could look for a spread trade here. You could short sell the General Electric stock on rallies and buy Walgreens on dips, because they're going to experience some further institutional rebalance, if that makes sense to you. It's a good trade. You could do it with options and limit your cost base as well. All right, Donald Trump. Let's move into the main subject of today. Donald Trump has threatened a further $200 billion in tariffs, imposing tariffs on $200 billion worth of goods. Here's the interesting part. That would bring the total to 450 billion, and that approaches the 500 billion sum. It's pretty much there, and 500 billion is all that's being imported from China. So what they're going to end up doing is essentially put a tariff on all imports from China, and that pretty much caps out what the United States could put a tariff on. There's no more goods to put a tariff on. China does not have the ability to put a tariff on $500 billion in the U.S. because they don't import that much. They import about 75 billion. So they're already sort of at their peak, which means China's going to be looking for other options, all right, to retaliate or to respond to this provocative trade war measure. And we had some discussion in the chat comments with one of our members. And yes, the U.S. started this trade war officially, but some of the verbiage, the trade war term wasn't used until yesterday when China said we're responding to this and it's officially a trade war. But I mean, that's what scared the market, the terminology. The origin obviously happened with the first round of tariffs by Donald Trump and his administration. Now China's got to respond. And they have three options. I'm going to go through them with you because they're very important. Last night, China actually took action on their first option. And we're going to start with this one. In a situation where there's tariffs on goods coming into the United States and out of China, if you look at it from China's perspective, their exports are going to become more expensive artificially and right overnight, immediately more expensive, 25%, 10 to 25%, depending on the goods. So what could China do to make them more attractive once again? Well, China has already, the People's Bank of China, PBOC, has injected a lot of money into the economy already. $37 billion injection of capital into the Chinese economy, into the markets by the PBOC last night. All right. According to China's central bank, they say this will ensure liquidity and reasonable stability amid trade threats from the U.S. It also recommended a reserve ratio requirement cut. Basically, they're going to require banks to hold less money as reserve ratio, and then that additional amount that they don't have to hold on deposit will circulate its way into the economy. That's another way of providing liquidity so the market's able to kind of gather a little bit of an economic spur from that. That's their first option, and they've done it. Also, a lot of companies are pledging to stock buybacks. They're saying we're going to put more of our capital to purchase the stock back, creates buying support for the stock market. And that's another way that they're actively supporting the market. But that's just their first option. The first option is to provide liquidity into the market to support their asset prices. There are more severe options. Option number two would be for China to devalue their yuan. Their yuan is their currency. By devaluing a currency by 10%, let's say, it makes their products 10% cheaper. So do the math. Donald Trump says, I'm going to put a 10% tariff on all your goods. A company exporting sells for 10% less on their currency. Now it's worth less. The currency is devalued, and that offsets the tariff. Ironically, though, Donald Trump started a little bit of this trade war with the intent. Well, one of the parts that the U.S. administration is not happy with is China's devalued currency. They think it should be valued higher. I think that's a decision for the country to make. I don't think the U.S. should decide what the Chinese yuan should trade at. However, I don't necessarily think that China should decide what the yuan trades at as well. They should open it to be a free market. Right now, it's pegged. It's artificially set. So what China could do is devalue their currency and allow their goods to be more export. Their exports would go up, right? They'd be more enticing to international buyers because they pay less in yuan in order to get those same goods. That will offset the tariff. That's option 2. Option number 3 is the nuclear button. And if United States really gets China riled up, this is option 3, and they could really sort of, I mean, I don't want this option to happen. It's not the nuclear war, but it's a nuclear economic option to dump the U.S. treasuries. They could say, all right, well, we need some capital, sell U.S. treasuries that we got. China's one of the top holders of United States debt. Sell that off in the market, take the cash, and deleverage from the U.S. economy altogether. That's going to cause a crash in markets, not just in the United States, globally. And China doesn't want to do that because they have a portfolio of securities. What happens when someone finds out you're going to sell all your securities? Traders are going to start selling before and make you get a really low price for your sale. So that option is not going to help anybody, but it is the most severe and probably the last resort option. I'll tell you guys this information. I'm going to share it with our Market Analysis Live webinar subscribers this Sunday, but that's already happening. I hate to say it, but that's already happening. China's getting out of treasuries. All right, Japan's been selling their treasury holdings in the United States. Russia's been deleveraging and selling a lot of their treasury holdings. India's sold some of them. They don't have many. And you're seeing the international community sell out of treasury debt in the United States. Here's the big problem for the United States. It's a very indebted nation. There's a lot of debt that they carry at a government level. And the problem with that is they need to fund their government operations, right? They need to pay for infrastructure. They need to pay for Medicaid, Medicare. They need to pay for a lot of things as a government. And the way they've been financing that is selling debt to the international community. And down the road, that poses a really big challenge of how the United States is going to capitalize to run their government. So that puts a lot of focus on government spending, how they're going to manage their book and their current accounts. And it poses a lot of future challenges for the United States. So I'm going to say this. Trade war helps nobody at all. And I'm going to wrap it up on one last note, but trade war is not good for anybody. Nobody's going to win. This is going to be a fight where everybody loses. Everyone's going to leave with bloody noses, broken bloody noses, bruises, and nobody's going to feel like they won this one. It's dangerous, and that's why the market repriced assets so severely. So listen for more of this. We've rebounded a little bit on equities, and I think we could go a little bullish here after the rebound. But all in all, in the next medium term, next couple of months, very high risk to the economy and especially asset prices and stock markets. Last but not least, the Canadian Upper House of Parliament has approved a revised bill to legalize marijuana within 8 to 12 weeks. I'm in Canada. I'm Canadian. I'm going to be able to go to in Canada, we have something called the LCBO, Liquor Control Board Ontario. There's government shops that you can buy alcohol from, and you're not allowed to buy at a gas station. It's not like Europe. When I travel to Europe, I buy 2 liters of alcohol for beer, 2 liters of beer for cheaper than 2 liters of water. But anyways, point is, you're going to be able to go and buy weed openly. It's going to be open circulated marijuana economy. And they've passed the bill on a revised basis for 8 to 12 weeks to roll it out. It's the first nation of the G7 economies to legalize marijuana. Everyone's going to be watching the Canadian model to see how it works. And stock companies in Canada today are probably going to rally the cannabis industry. There's a lot of investment already, and we could see more money coming in institutionally. So that's the opportunity for long-term investment. I wouldn't day trade cannabis stocks, but if you're looking to get into an industry and invest a little bit of money, cannabis oil has shown to have real big medical benefits. I'm not invested in it. I don't own a single cannabis stock. I day trade for income and use that income to invest into other things outside of markets. I like to diversify my book. I don't personally like the idea of having everything being paper ownership. I like to have real things like land, property. I like side income that's real, tangible, that you could feel, right? But anywho, I'm not knocking anybody. If you're investing in cannabis industry, you might have done really well already. And I think there's a lot more to go. I don't think it's over. I think it's just starting. All right, guys, I'm over my time allotment. Victorio made me this crazy espresso coffee this morning in a mocha pot. And my gosh, it's fueled the motor mouth. You guys have yourselves a great day. Manage your risk. A lot of good stuff to trade today. Oil inventory is at 10:30. That's your prime volatility mover. You guys have yourselves a great day. I'll catch you soon. I'm going to turn around and open up the trade room. Thanks for tuning in. If you like this video and our morning updates, YouTube made a button for that. Click it down below. Give it a like. Tell YouTube you guys like what we're doing. And we could share it with more people. We could keep this going. You guys have yourselves a great day. Manage your risk, trade pro. See you tomorrow at 9 a.m. Thanks for tuning in. Goodbye. Patented chair spin. Too many chords for these patented chair spins nowadays. Trade pros in the room. How are you guys doing? You ready to get some levels and trade ideas for the day? Some of our levels from yesterday are still around in today's price action. So we're going to be using those for the opportunities. We had a great trading day yesterday. Let's push one more.